Hi everyone, and welcome to another FX Edge Power Hour. I am Marcello Ducil, and I'm going to do today what I've done for years, which is an evaluation of our market conditions and an appraisal of our strategies based upon those current market conditions. Today we're going to have a lot to talk about. We're also going to talk about today 4 highly volatile market conditions that could cost you money. They can also make you money. Then we're going to have a brief questions and answers session. So let's go ahead and get started with our presentation today. So, non-farm payroll news release. The non-farm is the most relevant fundamental indicator for Forex traders. It is also the one that moves the market the most and produces the biggest amounts of volatility. It is advised for a trader to be careful during non-farm payroll since most traders lose money since they can't handle the volatility. Another option is to have a specialized strategy that can help you to profit from non-farm payroll without risking a huge amount of your capital. The last piece of advice, if you don't know what you're doing, do not trade it. Bottom line. And that is the reality of this situation. Clearly, I'm going to also talk about the non-farm payroll. It's an opportunity for me to plug that particular trade, which, by the way, has done phenomenally well. Especially in the last 24 hours, it has done its job, and it probably will shut down today or tomorrow till the next opportunity that we have to take it. But you've got to know what you're doing. Unless you have a specialized strategy that can really trade non-farm payroll or any of these major fundamental announcements that come out in the markets, then you don't need to be trading them. That is not a rookie's move at all. Okay, and most rookies, that's the first place they go to, so they think it's quick profits. Okay, after a significant global event occurs, significant global events have substantial effects on the world currency market. Events such as natural disasters can affect the country's economy and their currencies. A good example of this is the tsunami disaster that happened recently in Japan and had a big impact on the pound yen that actually dropped by over like 1,000 pips during the first hours of the disaster. Okay, not 100, over 1,000 pips during the first hours of the disaster. Now that was a substantial reaction by the market, and it's very difficult sometimes to trade those types of announcements. But again, with the caveat being that if you don't know what you're doing, if you do know what you're doing, or you have a strategy that is catered toward those types of announcements, then you'll do just fine. Okay. During a governmental intervention in the currency markets, kind of like what we've seen in the Swiss franc recently. This applies mainly to the European countries. Sometimes governments decide to intervene their currency market to avoid further financial crisis and problems. Whenever this has happened, a government intervenes in their financial system. The market tends to react to it from the moment the news about a potential intervention occurs. We have seen this in the yen. We've now recently seen this in the Swiss franc. Okay, those are the times that you're a little bit iffy about what's going on in the market. Once again, if you have a strategy that can deal with these situations, that's a bit different. That's our caveat. But in general, these are situations that you may want to stay away from. Okay, after a trend has ended and the market has started to go sideways, trends end because the laws of demand and supply move prices the opposite way. As a result, currency pairs get oversold and overbought and start to move away from the trend. Whenever this happens, a market is most likely to move sideways and have a much higher level of volatility. This is the moment when you need to exercise caution and focus your efforts on capital preservation. Okay, guys, all this stuff, some of you think that this is, I get a lot of good comments about these little presentations that I do at the very beginning. This is how I trade. This is my philosophy of the market. This is how I'm able to do all the things that you've watched me do over the years. This is how we do it. Okay, we do it by having this kind of impression of the market, being careful, knowing when to use capital preservation, knowing when to be more careful, knowing when to be greedy, knowing when to be fearful as well, or when not to, okay? Knowing when to get in there and make money, and knowing when to hold back and to preserve yourself. These are all important. So these lessons that we're learning even in these presentations, these are the true principles of the market that will help you to get where you're going. Many of you who are in this room right now are already there, probably in no small part due to what we've been able to do here in FX Edge. and certainly because of your hard work and your diligence in this market. But definitely, guys, these principles, they stand true regardless. 20 years ago they were true, and they're very true today.